you can use the capital losses that you can generate from the crypto sales and use that to offset those other capital gains. So you really
Hi, I'm Bette Hochberger, CPA, CGMA. This channel aims to educate you on tax, tech, crypto, and finance related news. Come learn how to grow and keep your wealth.
Today we're going to talk a little bit about crypto. We haven't talked about crypto in a minute. It's been a lot of real estate, so we're going to do a little bit of crypto tax tips for you coming at you here. I actually had the pleasure of yesterday being at the Naples Bitcoin meetup. That's a great group if you're in that Southwest Florida area, right? Check them out. Awesome group of people there. But, we were talking, as one does at a Bitcoin meetup, about crypto and taxes. So I figured, what a great time, great topic. Crypto tax tips. Basic. So crypto, you get taxed when you either sell or swap, right? If you're just holding, if you buy and hold, you're not going to have a taxable situation. So if you're like, well, I have a long-term view, I'm just going to buy and hold, no taxes. Easy tax planning, right? That's your biggest tax tip. Nothing to do. It's great. But if you're a little bit more adventurous with your crypto and you like to buy and you like to swap, things like that, now you're into the capital gains world, right? So you're going to need to keep track of everything, right? Keep detailed records. Now, as opposed to a couple years ago, it's getting easier, right? It's easier to have those records. We're all a little bit smarter about needing to deal with it for tax purposes. And we end up with more software that works better for us. We have more things like Robinhood and brokerages like that let you put crypto transactions in there, and they give you the reporting, so that makes it a little bit easier. But if you're not doing those more like mainstream kind of platforms, you need to make sure you are keeping amazing records. Amazing. Because now it's not that obscure thing that nobody knows about, that the IRS is like, what's crypto? We don't know anything about it. How would we ever find you? They're going to find you and they're going to know. They're going to know that you're, not reporting what you're supposed to be reporting. So we need to keep detailed records of all of our transactions. Now, can we talk about tax loss harvesting? The biggest difference between crypto and those like more old-fashioned TradFi things, right? As opposed to your stocks, your bonds, the holdings in more traditional brokerage accounts where all of that stuff, not only does it get reported to the IRS, but it's like really, regulated, and there's a lot of rules. We in the tax world, in the crypto tax world, we have no wash rules, right? You can buy crypto, you can hold it for however long you want, you can sell it, you can buy it back the next day. You could actually harvest the losses that are generating. So this is something that we talk about with a lot of our crypto investors, especially when it comes down to the end of the year. See if you need some capital losses, see what crypto you have that you can sell, buy it right back. That is totally a legitimate way of tax loss harvesting for crypto, right? Just for crypto. Don't do it with your stocks, don't do it with your bonds, just with your crypto. Now, the thing that's neat about the fact that crypto's taxes capital gains, if you've got capital gains elsewhere, maybe you sold some real estate, right? Maybe you sold something else that's generating capital gains for you. You can use the capital losses that you can generate from the crypto sales and use that to offset those other capital gains. So you really want to look at your whole picture, look at all of your assets, look at all of your holdings, and see this can be a really powerful tool. But like all tax planning, all tax tips, it has to apply to your situation. So overall capital loss you can only take for the year $3,000. So don't go and generate yourself like a $10,000 loss. I mean, you can, but you're not going to be able to use it, right? So just keep that in mind. You have a total loss that you can take, $3,000. Now, something you may or may not have realized, you can actually invest in crypto in tax advantaged accounts. Think IRAs, right? Retirement accounts. Things where you could have crypto growth that could potentially be not taxed. Ooh, that's neat. Now, those are a little bit more complicated, right? And it's not your run-of-the-mill type of investing, but there are companies out there that will do that type of investing and let you open retirement accounts that you can put crypto in. It's kind of exciting. You're going to have to do a little bit of research, make sure it works for you. And there's a lot of rules with those types of accounts, so make sure you really are well versed in what you can and can't do. But it's an option available to you if you believe, especially in holding the buy and hold, and you're going to be in it for the long haul. That is something that you definitely want to take a look at. So that's it for today's crypto tax tips. Hope you found it helpful. We have been talking so much about real estate. We haven't really been touching on the crypto a lot. So I was happy to hop on for a few minutes and do that little spiel again back in the crypto space. And do you have any other questions? Do you have any situations with your crypto you need help in? Get in touch with us. That's what we're here for. We have a lot of resources. If we can't help you, we'll get you connected. And as always, we'll see you next time.
Thank you for sticking around. I hope you learned something new. Please leave a comment, like, and subscribe to my channel if you want to continue improving your tax and financial literacy. Bye.